And what we are going to cover today, before we begin, a quick acknowledgement that trading involves risk of loss and that this presentation is educational in nature. I'll take a minute to read that through. And past performance is never indicative of future results. All right, well, I have some really good stuff to go over today. It's going to be a mixture between the products, or what most people have anyway, is VIP. So I'm going to just go through a couple things of the functions, and that's what this is designed for: special announcements, what's coming, what's doing, and of course what's happening right now in the world of trading as it revolves around the John Person Lifetime on TradeStation and the Algo Optimizer. So just to let you know, it's here. We've been talking about releasing Algo 17, and this is where we make some special announcements. So Algo Optimizer number 17, and it will be renamed. Actually, it's not even the same product. You'll see why. I'll introduce it a little bit tonight. This is not an Algo Optimized event, but we will incorporate it with the PUG, which is the Person User Group for TradeStation. So the Algo 17 Extreme, because it really, we couldn't think of anything, but it's so vastly different from the original version of what we had used, and we've come out with free upgrades, and everyone's gotten a free upgrade, and those who have the Person User Group, those who have the Algo Optimizer, we're looking at releasing this, believe it or not, within the next few days. I'm going to probably play with it a little more over the weekend, put on some live trades. I did some today. It worked out fabulous. I'm going to put on some live trades tomorrow on Friday, which is not one of my most favorite days to trade, but I will put out some trades. And then if everything works well and there's no bugs or issues, then guess what? We're going to put it in your email box, and you'll be receiving Algo Optimizer. Person Asset Management. We've been talking about this all year, that we said we were launching at the end of sometime between the second and the third quarter. Well, guess what? We launched it over a week ago, 2 weeks ago, in fact, and it's just like, why didn't I do this? Well, I did do this, but why didn't I do it sooner is my initial instinct. And so therefore, it's a great expansion to Person's Planet to expand our services into asset management. Also, as a reminder, and something I think everyone should know about, is our 3-day Algo Mentoring Seminar here in Palm Beach, November 29th, December 1st. That's always a phenomenal event. And then lastly, it's not here, but I did want to let everyone know, it seems that Algo Optimizer has been taking people by storm. We've done some mentoring classes here in our office, and literally every single class has been sold out and overbooked, and we had scheduled one more, last one for the year. This one's in October. The last one, I mean, my office is not enhanced for large crowds by any stretch of the imagination, but our training room, we generally hold up to 5 people. We've had 6 to accommodate in our last session, which was a little crowded, but it worked. But needless to say, that's what's coming up in the world in the special announcements. So with that said, I wanted to get into first and foremost a couple things today about the markets. And one of the main functions that I think the Person User Group, and one of the more dynamic things that we should be looking at right now in this time frame, in the weekly Thoughts and Observations, our advisory service, we've been looking for a rotation into a couple areas. 1, telecom. 2, staples, particularly a couple of the food groups. I was been avoiding technology because I was expecting a pullback. In fact, we put on a Q put spread just because we were looking for some market internals there in the Qs, that and a lot of different stocks were starting to show some divergences in their strengths. And one of the tools that we used was, of course, in the Person Market Catcher, the PMC. So the PMC, if we take a kind of a review down memory lane, there's been a few instances where Facebook, for example, we all know about that crash or that decline or debacle. And what's interesting is that I wanted to point out, as we did get a new higher high reading in prices, we did get continuously lower pricing, not only in the person market catcher, but also in the person volume indicator. So quite a difference of a scenery there. Now, I put out a tweet today, and I just wanted to make sure. By the way, as an example, if you notice the difference, the relative difference, if we compare an apple to an apple, and which is the sense that when you have a volume reading, when price makes a newer high, and I mean this is showing newer high, and the volume can't exceed. This is another primary example where on-balance volume is not as reliable as it once was. The person volume indicator, you guys that have the VIP, this is the reason that you have this tool. This is why it is not going to, it's a very exclusive tool. It is extremely powerful in of itself. So the VIP, you should be looking for this volume indicator to help give confirmation of bullish convergence. That's when the price makes a newer low, and the volume does not in the volume indicator. Now, today I sent a couple tweets out with some video updates. One was in the E-mini S&Ps and also Facebook. So let's take a look at how do I look for opportunities in the marketplace, and how do I understand if a market is coming near a specific fair value. Well, one, I use pivots, obviously. So we could all take a look at longer-term pivots for stocks. And one of the most interesting aspects, if you notice the ease and the simplicity of being able to have all the indicators, the applicable indicators, and the one that's, and you know, here's a funny thing, the one that's the most biggest pain in the neck to always scale has always been on balance volume, and I'm finding it least useful in my trading repertoire. But let me go over here, and I'm going to try to scale this again, and here we go, and we'll hit OK just so that everything is in line. What we're looking at is Facebook. Facebook had a monthly low close doji. The market is now trending lower. We now are going to enter this month a potential at the end of this month. This is September. It's a long month. We're going to be entering a PPS sell signal. The only problem is the last time we had a PPS sell signal, and again, this is the beginning of the month, so we don't know if that's actually going to trigger until the month closes. And it may, but what I'm looking at is prices down in here. As we've seen a decline, we've seen no formidable decline in at least on balance volume. In fact, even my volume indicator actually confirms that. It's not racing to the sky. It's not deteriorating. In fact, the momentum, which is the histogram bars of the volume indicator at the bottom here, is actually showing that the downtrend is losing momentum. Well, it may be no wonder because we are sitting right at this line in the sand, 162, and I targeted it down to 162 to 155 is support. And that puts you back to the last time the market was down at these lows and puts you back to where we were like a year ago in July of 2017. So you're actually buying Facebook on a pullback here. If you like Facebook at support, you'd be buying, going back, turning back the time of the clock. What did I prompted me to put out that type of analysis? Well, first and foremost, here's an interesting thing. We should expect as a trade a short-term bounce. We've got a gap that was filled in the market over here. We've got old support under the market by chart analysis, right around that 155. And the person's market catcher, the relative strength, while we are making newer lows in the market, guess what we're doing with the person market catcher? Showing some bullish convergence. We're also kind of showing if the market turns up from that low in Facebook, if they maybe got a little unruly sell-off due to the testimony in front of the Congress or the Senate on Capitol Hill this week, we are developing a potential convergence pattern in the volume indicator. So I wanted to share that with you guys. And of course, the momentum, market made a new lower price quickly, and it's also showing a little convergence. So several different indicators that have nothing to do with each other. They are non-correlated. This volume indicator has nothing to do with this histogram. This is volume in and itself. This is a momentum indicator that dictates the strength or weakness between, and which is measured between the price and the moving average and the distance between said price and moving average. That's what that momentum comes from. And this is just a rate of measurement of change of the market in question, which is Facebook, as compared to the S&P 500. It's kind of an interesting comparison when you utilize different market analytic tools. Now, I believe in volume. I just think something's going on with on-balance volume that's not as efficient as it once was when I first started teaching this back in, I don't know, back in 07, 08, 09 area. And yet the relative strength is working and the volume indicator is working very dynamically well. So I just wanted to get through if you do receive tweets, what the hell was going on? Where did we come up with this analysis? And as jokingly or passively or whatever you want to call it in the room, many people know I really don't use Facebook. In fact, I really don't have a Facebook account. It's linked to Twitter. So every time I tweet something, it goes to a Facebook account. My own family, they don't even go to Twitter. They all want to, hey, you went to the Bahamas, you were fishing, you know, why don't you post that on Facebook? It's like, because I don't really do Facebook. I don't believe in posting, I'm here, you're not, screw you type of stuff, you know? So that's just the whole thing with Facebook with me. So a guy who doesn't even use Facebook, yeah, I mean, I'm probably one of the very few in the world, but of the hundreds of millions of people, of users, and yet here I am looking at the stock and saying, hey, I think maybe there's an argument for looking, even though we're in a sell mode, the indicators are starting to warn that the market could see a reversal to the upside. So anyway, just as a kind of a disclosure, it's kind of weird. Why would I even look at something I don't even like? But because it's a trading opportunity. So that might be, you know, I don't have skin in the game, and I don't have any different ulterior motives of promoting Facebook. But it did pop up only because it's in the news. I looked at the price. We are also telling everyone, if you read the weekly thoughts and observations, I said, you know, you probably want to watch for 60-minute signals right now. Now, that's a very important concept that I wanted to point out, because the 60-minute did end up in a little mild buy signal here. 60-minute buy signal ended up in a small buy signal. But I'd want a 60-minute buy signal that had like a trilogy setup. And we don't have a trilogy setup. What is a trilogy setup? Three things happen. A, market has to kind of break a downtrend or be in a higher time frame buy setup. So that's number one. Number two, it has to have a buy signal, either a PPS or high close doji. And number three, it's got to close above a last conditional change, which is it has not done. So basically, a trilogy has not been initiated here on Facebook. Or what we can look at is a last conditional change breakout. So we haven't had that last conditional change breakout, which either we're going to move maybe lower and test that level briefly and come back up and form more of a bullish convergence. And that's what I would look for, is a 60-minute buy on bullish convergence, something of that nature, or in strengthening volume. That's what I'd be looking for. How hard is it to do that? Well, it's pretty easy, and that's what the nature of the PUG user group is for tonight. Now, we have created different pages for everybody. Short, long, stocks long term, and for those that have the complete VIP package, you have this brand new, or what we recently added was a qualification of a last conditional trend signal. In other words, like I just shared on the 60-minute, if you get a buy signal and it's starting to blink, all right, this says neutral. That means it generated a buy signal, but it didn't close above a last conditional change. We want to see a last conditional change buy signal. That would say it, right? Last conditional change bull or bear. So that helps qualify, or at least give added confidence that the market is generating a buy signal above a last conditional change. So that was for me, this was one of my personal scans that I thought was valuable. I added it, and like we said, anyone with the VIP, anytime I add something that I want, as we have constant changing market and market volatility and market conditions, and products for that matter. I mean, now we're trading pot stocks, cryptocurrency's been around now for less than, well, actively trading cryptocurrencies for about a little more than a year now. But that's a relatively new asset class, right? And so is pot stocks. And there's a lot of different ETFs out there and different asset classes. Take as an example, volatility. We have volatility, and that's why we like to go top to bottom. We look at our what we put together in sectors, what signals we're looking for, whether or not we have relative strength improvement, what the range is of the market, what the average true range is, what is it compared to, what's the volume recently, and what's the current volume. And that's kind of like some really quick dynamics to help you make better trade decisions. And that's what this product was all about, to help individual investors looking for institutional grade research in front of them. And this is, without a doubt, institutional grade type research to find opportunities on your own. Is the market performing? Is it outperforming? Is it underperforming? The person market catcher showed that, and because of TradeStation, we can put it numerically on a radar screen. And all I have to do is pretty much double click on this, and I can see red and is bad. Red means that whatever is going on, OIH for example, is underperforming the market. The relative strength is weakened beyond the market. In fact, we looked at a buy signal in OIH, and we got quickly stopped out as relative strength was kind of improving a little bit. We bought the pullback, and then we got stopped out. We haven't been in it since because, well, the reason I never added it back into the portfolio, OIH, is because the relative strength started to weaken, and it never has improved. So therefore, we've avoided it. That doesn't mean you can't sell short, but if you're looking at longs, you want to avoid buying that sector. And with that said, take a look at what is strong. On the board today, wow, aerospace and defense. I mean, it got a little choppy, as you can see in here, right, gang? And hopefully this is the projection caught up. I don't want to go too fast. But what I'm looking at is the best quality or the highest ranked performance or market that's outperforming the market. You can clearly see that's the person market catcher and in the relative strength. So if I'm looking for buying opportunities, I want to look for buying opportunities in sectors, in stocks that are in sectors that are outperforming the market. So, I mean, if you think about it for a second, we have in this market environment, this is based off of today's price action. Consumer staples. Bright blue formed a high close doji yesterday. All that information, and it's outperforming the market. In fact, it's been outperforming relative to the rest of the market. The volume's starting to kick in on our indicator here. It's been in a lull. It's been in a great buying setup right in here. And all of a sudden, it started to get a little choppy and dicey, consumer staples sector. And so one of the best looking, or what attracts me to a sector first, or a stock, is to look at the sector performance. And then I can go on down the line and go to that sector. So we scream on down the line, and we can go, you can see there's aerospace and defense, technology, semis, consumer staples. I go down to consumer staples, and what do I want to look for? Well, here's how I usually do this. I look for scans of sectors that are in providing me high close doji, or stocks that are generating a daily buy while in a weekly buy, which is a scan number one. And if you think about it, a stock that's in a weekly buy that has a few day pullback that goes into a daily buy signal, isn't that a short-term buy signal against a higher degree time frame? And so we should see what? A continuation of the strength in the trend. So I look for that type of scan. And then, as I'm pointing out now, I look for stock sectors that are outperforming the market. And then I look for stocks in that sector that are the relative strengths improving. Number one, the weekly outlook, the pivot trend is green. Weekly signals are bullish, and that's what I'm looking for, right? And so what is this column right there? Once again, weekly trend, that's the blue-gold relationship. When the pivot point blue line is above the 3-period pivot point, it's deemed to be in a bullish outlook. Now, one of our stocks that we've been in patiently waiting for some upside, better upside, has been in General Mills. We had been in Kraft, believe it or not, Kellogg's, excuse me, Kellogg's. How boring was Tony the Tiger, but it was boring enough for a pretty decent return in a trade with limited risk factor, so it was a good choice. And so when we look at like a General Mills right now, and I know I posted that out today in Twitter, not because of today, but because all of a sudden it started to move up. It started to move up as the longer-term analysis suggested could. And what defined is my longer-term analysis? We have buy signal over here, a high close doji. It pulled back. It didn't stop out, but then it generated another buy signal, and the trend is up. And we just bought a pullback against rising moving average. The person histogram was moving higher, and then the volume indicator was moving higher. And here's a great example of, I don't know what's going on with on-balance volume, but here's another example of where VIPers, I mean, I don't know about you, but that does not look like a convergence pattern. It almost looks like it's equal or slightly lower, hinting at the fact that maybe this sell signal was true on heavy volume. Clearly, you can see the momentum at the same point in time. You can see, and it's right here graphically, there's a bullish convergence pattern where there is no bullish convergence pattern. There is truly a bullish convergence pattern here. So you're lining up a secondary buy signal. You're lining up a secondary buy signal under better condition, truer information. And so the market rallies, and what do you look for? It rallies, a pullback. You buy the pullback and define your risk. And that's what we did with General Mills. It just so happens it's also in a sector that's performing well or starting to perform well. So General Mills, now we're still in the trade. Let's not toot the horn too loud. If it gets to 50, it'll be a different story, but it's still a nice trade. And I'm just saying, suggesting, here's how we came up with that idea. It's not because all of a sudden it's summer and I started eating mounds and mounds of Haagen-Dazs ice cream, which, by the way, is General Mills' parent company to Haagen-Dazs. So, I mean, it's got a lot of decent products. It's the cereal. It also Progressive Soup is under their label. You know, and it's a, I don't want to call it the back-to-school smorgasbord, but if you have kids, they're going to wake up in the morning and have cinnamon crunchy toast cereal, or maybe, I don't know, special whatever cereal they like, or maybe biscuits made out of what? Rolled gold flour or Pillsbury Doughboy flour, right? That's General Mills. So when they are sick and they're at home, they may have chicken noodle soup from Progresso. And if they're really good after a soccer event, maybe you take them to Haagen-Dazs ice cream, right? So there's the, I like that connection, the back-to-school connection with General Mills. So hopefully we'll start to see some increase in activity. Notice on this board here, when you would ask yourself, is this a stock I want to hold? On today's rally, the market went down, General Mills went up. But how did it go up? Did it go on good volume, bad volume, average volume? Well, considering the last 10 days, because this is a 10-day, I set mine at a 10-day ATR on volume average. It was 3.3 million shares, and we did 4.9. Wow. I would say today's rally was on substantial volume. I'm sure you would agree. The average true range is 75 cents, meaning in the last, that ATR is set at 10 days. It's a 75-cent mover. Today we doubled that ATR, and volume was almost was it 60% higher. So that's a pretty substantial move for this market. Okay, so 60% increase in volume, double the ATR, and I like that. A bullish last conditional change. Why? Because the market closed greater than its last conditional changes. So you can qualify that it's been in, and again, let's take a look here where we're at. We're at our daily chart analysis. Let's take a look at the daily. And the market's in a buy signal over the last couple days, but today it's now a bullish last conditional change, because it's warning you it closed greater than another last conditional change. Kind of opens the door for maybe some higher prices. A huge volume rally in a market environment that closed above all types of old high and resistance in the market. So that's positive. That's as positive as we can get in the market. What would not be positive, and of course we always have to be on guard for this in the market while trading, is what's called equal and opposite. The market goes up, and then the next day, whatever reason, it goes right back down again. So, I mean, there is always that risk, but we're in a position at lower levels. This was just nice to see, okay? So going through the examples of how do we get better trade ideas is by understanding what you're looking for. First, you need to understand, is relative strength important? And I think relative strength and volume are extremely important in this society and of now what institutional traders are doing. So the answer is yes. Money is following money, and when something is weakening, the relative strength is changing, then by gosh, you're going to see probably an exodus. You know, you look at what is really negative on the board in retail. Abercrombie & Fitch, for example, A&F. Here's a stock that, again, the market generates a sell signal. And of course, earnings has something to play in this concept. And you look at the histogram, and you look just at the information of your relative strength, and I'll bring this into picture for you. So here we have a situation that the relative strength is red, and that's what shows on the charts. You look at this, and I mean, we're not going back that far, just the highs in April, markets at newer highs, and the relative strength is nowhere near that same high. The momentum is weakening, and the volume is falling off the face of the planet. So by the time you get a sell signal and you look at these conditions of the market, you're less likely to buy that stock. So somebody, I think, as the relative strength is deteriorating, you know, this just goes to show what you want to avoid for buying opportunity, or if you're in that stock. When we take a look at Amazon, which has just befuddled me, and I'm going to be honest with you, it's been a befuddlement, but I think we're going to come to reality one day, because the reason of the befuddlement, and let me go into insert analysis technique on my weekly charts here, and let's put in the person market catcher. Why am I befuddled? Well, real simply, the relative strength, it hasn't gone negative. It's still green dots. See the dots? They're still green, which means it's still positive. But when past times and when we've had corrections in the market, the relative strength starts to weaken, and you go into a, you know, at least a, I don't know, 2-3 week lull, or a 2-3 month lull or correction period in the marketplace. And we've seen that all summer. When we were on our cruise in late June, I said, gang, we don't have a sell signal. There's no sell signal. But when one does form and you have a weakening relative strength, if it comes on a volume signal, then you'd probably want to buy puts. You know, what's funny is there's no sell signal in Amazon. Why am I befuddled? Because, and one day we'll know the truth, because the higher it goes against the overall market, the relative strength is weakening. It's vulnerable that when it generates a sell signal, I'm pretty confident it will take a wallop. What day is that coming? I don't know. But we wait for it means it's vulnerable. Doesn't say that the stock can't go up higher first. It says that when it does generate a signal under a divergent pattern, then it's vulnerable for a sharp sell-off. All of that information right here in one page. It's amazing. When I say that this is that you have institutional quality information by using TradeStation's radar screen with a person's indicators, it's very powerful. How many new, fresh weekly signals? Click on weekly, and I could say right now, if we close here or lower, I've got Auto Nations right here. Auto Nations blinking a low close doji. I have new blinkage going on for a lot of stocks will generate weekly low close dojis. I know many of you know this, and I just wanted to review. We covered this in mentoring last week about how do you qualify better stocks, or what do you look for? You know, generally on a week-to-week basis, the week before and the week after, I have a nice little list of earnings. And we actually handicapped a move up. Unfortunately, in Avigo, Broadcom, it did beat earnings. You know, the market generated today, the whole sector, everything went down today. But Avigo had a nice report, and it's more prone to see some upside in what we are looking at in the marketplace for Avigo. And guess what? It did recover, and look where it is, 224. Facebook, I think Facebook coming down today and getting near support. I will be looking for a longer-term buying opportunity, and I think as we're near pivot support, I would be turning on your stocks short-term page for swing traders looking for quick little bounces, and I would have your 60-minute chart up, and I'd be watching to see if we have, and just create a small little watch list for yourself. So if you think you're going to have markets, just click on, for example, nothing on space 508. Right-click, insert a label row, and then type into that label row whatever you want. Watch list. Watch list. Bing. So now, have I separated, I have a watch list. So if I want to watch Facebook, if I want to watch Apple, just a few FANGs, for example. I don't look at Netflix, so but I guess you could NFLX, you could throw it in there. And all of a sudden, they've been down already. These Netflix, Facebook, already, you got throwing the Tesla in there. Elon's got some issues. Well, Elon's had issues for a while now. But any of the momentum names that everyone's drilling in of how bad technology is. You could also put ADBE in there, software application stocks. You know, Adobe, if you just take a look at those names that I just pointed out, here's a stock that Adobe, big move recently. And when I say, well, maybe not recently, let's reevaluate the term recently. Adobe, I would say, is like stratospheric. One of these days I'll be a little concerned that the volume, and I think the higher something goes, the less likely people are to buy the same amount of shares. I can't buy, with the same amount of money, the same amount of shares. So my volume is going to go off. So that's partly, I think, one of the issues that we might see. Volume continues to trend higher because that's what this tracks, but you're not seeing lower participation, which I think the percentage change, and that's what this volume indicator does, it helps to reveal that a little bit better. So the moral of the story is there is a shot that we could see Adobe continue higher. I mean, there is a pivot there. Until we get a sell signal, the assumption is what? The trend's your friend until it's no longer your friend, all right? We need a sell signal, a breakdown, something to happen. So why am I bringing this to your attention? Because you have a specific watch list, and you can now use that on a 60-minute basis and find out if you're generating, like 60-minute buy signals, and if they are generating, in this case, look at Netflix. I just clicked on it just to show something to you. Netflix, I look at it, and the first thing I see is a buy signal that it didn't break out of a last conditional change. This is the 60-minute chart. That's what my eyes are trained for. I want to look at what the radar screen says the chart is saying to it. It's saying it's in a 60-minute buy, but it hasn't closed greater than last conditional change candles. So therefore, el no goodo for a buy. So what I'm looking for, if I'm as a swing trader, I'm looking for something that doesn't say LCC neutral, but LCC fresh bullish. So that's what I would be and how I would be utilizing this to my advantage. So here's a situation that's flashing at the end of the hour, is that we were in a buy signal and we closed in the FXI just marginally above a last conditional change. This, and under the conditions that the volume indicator is giving some pretty good convergence pattern. We have significantly lower low in the marketplace, right? And yet So the volume's supporting the fact that maybe this is a little short-term bottom. I would look for maybe some upside gap fillage in FXI. And so tomorrow I would have a list of stocks, and all I have to do is double-click whether I have high close doji or LCCs on my screen. That's very powerful and concise information to help me decide whether or not I want to be in a sector. If the sector's outperforming, how does that stock look? I mean, not all semi-stocks or tech stocks are down. This is Ambarilla, and the irony is, look at the relative strength. I'm just pointing and clicking examples as I go through of how this is an enormous helpful tool. Again, this is just the daily chart on Ambarilla. I mean, this is about as deathly as it gets. I mean, this to me looks like a little gap lower dump. It came right back, and all of a sudden, we've now closed greater. It's just telling me we've been in a buy signal. Unfortunately, it had a breakdown, but now it's in a buy signal on relative strength improvement, number one. The volume's not upticking as great as you would like, but it just warned me that Ambarilla is giving a buy signal and closing greater than past last conditional change resistance levels. That's something different, because when a stock or any market breaks above an old resistance on good volume, that means it wants to expand and explore the new frontier, higher price territory, kind of like Star Trek, you know, explore new territories, new frontiers, so to speak. So running scans, again, real simple. When you run a scan, part of what we said, at least with you guys that have the VIP, is two scans that I kind of look at are trilogies. Now this scan, I run my scans every day. They're pre-programmed with the trilogy so that I don't run into running, and I do run every single scan that I want information on. Like, for example, I already checked tonight after it went through how many new daily high close dojis, what generated on a day like today where the market's down, what generated high close dojis. Quite a number of lists of names. And I want to see, again, if there were any new, fresh, low close dojis. So you can see that I went and saw that a lot of some of the financials, which was kind of weird. None of them that were in, so that's good news. It's always nice that if you're long a product that it doesn't show up on your scans. That's always a good thing. But you know, I noticed today a lot of biotech, and you can see that right now. A lot of new, fresh biotech names populated in the healthcare. You may recognize a couple symbols here. So I think that it's without said that tomorrow Glaxo is a, you know, pharmaceutical. I mean, Glaxo's got some little issue. The more stocks in the sector that sell off, the probably not. You're going to see more follow through the next day. And so with that said, it kind of gives me an idea of what sectors are being liquidated, and then again, what sectors the market is adjusting or rotating into. So those are kind of powerful. I found it interesting that today, on a day like today, let's look at this. This is the trilogy buy signal, and this is, let's just look at one number at the end of the run here, okay? On the S&P 500, just so that you know I'm not cheating or forgetful, symbol universe, excuse me, all NYSE. So I must have changed that. Let me double check here. Sell signals, format, S&P 500. See, you can never trust anybody, including yourself. Always double check your work. Wow. So no wonder that looked like that. And I'm not sure. What happens is sometimes when I do a seminar or something, I forget to change the settings, and then I hit save all by accident. Never do that. Trust me. Do as I think. Do as I intend. Don't do as I say. Someone told me that at the last mentoring. J Flag, if you're listening to this, I think I give credit where credit's due. Don't do as I say. Do as I'm thinking. All right. So we'll rerun the buy, but you notice here with the formatted S&P 500, what's the point I'm trying to make? With a day like today, here are your big sell signals. KLA Tenor Technology, yeah, that's a big sell signal. Lam Research, yep, that was a big sell signal, but it had already been on a decline in a weekly sell mode. You got Macy's, kind of interesting because everyone wanted to be long Macy's at $40. Let them have it. By the way, I think Macy's will find some support. I don't know if it's got a little more downside, but boy, you can clearly see on the chart, gang, strong support, the old high right there. Probably may want to test the point of breakout, and if it pulls back over the next few weeks, we'll be watching to see if 30 is the number. Volume, look at this. What a false sense of security. On balance, volume says everything's fine. My volume indicator has been indicating that things are not fine, and in fact, things are troublesome. The relative strength is actually starting to weaken. This is a weekly chart. So it probably would prove to be a more powerful, as you could see here, we might, maybe longer term, like the next 2 years, it'll be a good trade, but in the next couple months, we might get a move back into the 30 area, which would give you almost like the right side of an inverted head and shoulders monthly chart, just anticipating that pattern. But the reason I'm sharing this with you is that I can take a copy of these names and I can use it, and so this is kind of interesting. We've run a scan today, 9/6 at 420 on S&P 500. We redid this scan for you, which was live right now on S&P 500, and we clearly have more buy signals. Look at this, more buy signals than we had sell signals on a day like today using the trilogy. That, I don't know if I would use that wholeheartedly as a contrarian indicator to say there are more buys than sell, tomorrow's going to be bullish, but I certainly like seeing stocks that go up when a stock market goes down. You'll notice that some of these are, at least I know of them, Verizon, telecommunications. We have a position in IYZ, by the way. We have, again, CenturyLink, another telecommunications sector stock. So, here you have a weekly buy signal, a pullback, a multiple day pullback, and a daily buy with a weekly buy, and it looks like volumes upticked, and it closed greater than, and this is the trilogy setup, it closed greater than a last conditional change. So that's got positive elements to it. Weekly buy, a small pullback, and the daily's going with the trend in a sector that's outperforming the market. Wow. You can take this list, okay? Take this list now and just copy it. And then let's go over to the advanced PUG and let's go to short-term stocks. Remember, we created that label watch list, all right? Now, I can do this. I can insert a blank row, and I can go, nope, excuse me, go over here and insert a label row. Like I said, do as I think, don't do as I say. And we can put scans. Okay, and now hit Control V, and all of the stocks that were on that scan, all the stocks in the buy signal right here that I just took, guess what? I can go over here now and say when the data fills in, and I can look at, and of course the data is taking its time to fill in, but boy, I like seeing a stock, didn't I just say this, a stock that's generating bullish last conditional change pattern. The daily is bullish. It's high close doji. The relative strength is outperforming the market. Man, these are some pretty good choices that give me odds. Now I can say, man, I kind of like these. And now I have to look at a couple other, little elements. A stock like UTX that trades 400, 350, I mean, it was up today on better volume, but I'm not trading that stock. And I'm going to eliminate this stock, which only has, I mean, it's a huge move. Let's look at this together. Of course, you all know this is Northrop Grumman, and it's aerospace and defense. It's a $300 stock, generated a fresh new buy signal, closed greater than last conditional change. Here it is. Last conditional change, closed greater than it. Buy signal, relative strengths improved on improvement volume. Wow, that's nice to see because it is in a sector that was outperforming the market. So I can now make a decision for tomorrow or as a swing trade. More importantly, I can take a look at some of these names and say, gee, do I want to get into some of these names they've already been in, past tense, high close doji, 60 minutes. So a lot of stocks nowadays, look at the difference here, 241 and now at 246. It went up to around 247 high today, right? A lot of stocks at the end of the day to the beginning of the day generate 60-minute high close dojis. Watch the 60-minute and go up and down after the first hour. So the first hour of trading at 10:30 Eastern, at 10:30 you should be going up and down your scan looking for stocks that are generating high close dojis, number one, or both, generating 60-minute high close dojis, last conditional change breakouts. That is a very powerful edge to you as a trader wanting to get in and then using the confirmation, if you like, I want to buy a stock that's outperforming, and I want to buy stocks that I can even look at that might be outperforming, that the sectors are getting stronger. So you have quite an interesting mix here in the marketplace. You have a staple, Colgate-Palmolive, telecom, one transport, another telecom, another staple, CVS. I mean, all of this is generating positivity and helping you to uncover trade opportunities in the marketplace. Tonight, I wanted to share, how do you get the most out of this? I mean, you can't trade every stock. You have to filter the best looking stocks out. You know, if you're not into buying puts, if you're not into looking for sell signals right now, I personally think that the market still has a very strong shot at another, I mean, I hate to say it, I mean, we'll take it day by day, but the advanced decline analysis is not on the S&Ps indicative of a market getting ready to crash yet. You just don't have that information. The Russell generated, I mean, the breadth of the market weakened again today. We generated a sell signal here against a rising moving average. And one of the issues is, it may be hard to see, but I'll give a quick lesson on how to better use this tool. The advanced decline did break down and make a new lower low, a swing low. But when that swing low, we were again a little higher. So perhaps the market has room to maybe see some downside. But here's the thing with that. The moving average is there, and the longer term moving average is there, and neither one have crossed over each other. So we don't have, this could be a very a spiky situation, which happens a lot. They move the needle on the advanced decline, but we're looking for a change in advanced decline over time and a moving average crossover, and that's given some really defined big-time sell signals, and we don't have that. Case in point is, I'll bring it into scope. When the moving average and the market closed below both moving averages, you got a couple extra days sell-off. When the market generated, and let's look at the bigger sell signal and the one that we're all waiting for. When the blue gold Notre Dame closed below each other, look where the market was. Look at that, trying to go through the, I didn't do a great straight line, but you can clearly see, if I could draw a straight line to save my life, let's do it correctly. Go to drawing, and I will go to a vertical line, and let's line that up one more time. There it is. Look at that. Picture frickin' perfect. Sell signal, weakening volume, divergent momentum volume when the market was rallying, and by the time that little tiny sell signal was given, the market had what? Already been a significant low, and both the blue and gold cross over, and then what did we see happen? Bang, a big sell-off. I would say everyone who was anyone had that setup and that signal confirmed. That's what is missing in the market at this point. It's not there. So I'm not going to trade something that's not there. It doesn't exist. It's not quite the same. So while the market is in a volume divergence pattern, true, it's not in a typical sell signal in the Russell. As much as I would love to say I think I picked the top in the market, I can't say that because I don't have the signals, okay? The Q's a little bit different. We might see a pullback, at least a retest of the lows. That's what we were calling for over here, and unfortunately it had another leg up. We're in September put spreads and looking for maybe the Q's to fall a little bit more. I would welcome that, believe me. It's hard to prognosticate to be in a bunch of stocks, be looking for the Q's to go down relative more than the other markets, but you know what? That's what we're calling for. And the reason I come up with that information is based on what's in your hands, what's on this pages. It's my job to help teach you how to get better use out of this. It's my job to teach you to get better use out of this, and that's what the PUG monthly meetings are for. Now, with that said, this is the most dynamic product on the face of the earth that I've seen, that I've worked with, that I've created. It's unbelievable. This is the volume indicator, gang. And I just want to share with you, because I yell this out in the trading room, and if you were in the trading room today, you know I posted in the room that we had an Arthur Merrill potential, Arthur Merrill W11 bottom. An Arthur Merrill W11 bottom states that the number 2 point goes slightly below the number 1 point. And I said, I even pointed a black arrow, and I took the time to type Arthur Merrill, and I yelled out, because we don't project this in the room, we project Trade Navigator. I said, we also are developing a bullish convergence in my volume indicator, not this one. Imagine the volume breaking, and for those who look at volume and they look at the sell signal and the market made a new low, this is one of the most ultimate traps in the market. Saturday, when we come together on our summer school mental fitness class, let me tell you something. Everyone should have done their homework by then, which you had to fulfill, and a trading plan. And I hope one of your trading plans, at least it's in my plan, is to look for bullish convergence at pivot support and look at the volume indicator. What does this show you? This is not helpful. This may have kept you out of the market or gotten, I bet you, people went short the market. What I was pointing out was simply we had a bullish convergence pattern and an Arthur Merrill and look for a market run up. I mean, I think on top of it, the Person Algo Optimizer catches a lot of different trades, but this one was actual trade done. And I got news for you. This was a beautiful setup. It was pitch perfect. It was the right trade. It was the right condition. Now, did it generate a boatload of profits? Not today, but that particular setup certainly has in the past. But you know what's funny? The market and the system gave the best and took everything the market had to offer. And here's the best thing. You didn't have to act emotionally. It was all prepared. It is a part of my game plan. It's a valid signal. It had valid setup, and it had, more importantly, tremendous value to it, the fact that it had that bullish convergence. Another example where we've given stocks about looking at OBV. Now, I'm not saying on-balance volume is no good. I'm saying it's less trustworthy. It's giving a lot of false signals. It actually made a newer low in volume, giving people the, at least maybe, insights that this sell-off was going to be on heavy volume and there would be more downside. Someone went short here in that low, and that's why we see the difference. Which would you rather have on your side? Something that gives false signals or something that illustrates incredible buying pressure in the market? And that's an obvious, that I didn't mean to insult your intelligence, but that's an obvious question there. So the volume indicator that we created, the tools that we put together, are something is different in this environment, in this day and age, right? We didn't invent volume. We just recreated a better way that volume is tracked, and that's a very exclusive tool. Next, I want to get into this real quick, this blank chart, and just to wrap this up tonight in our time spent. This was recorded, so you can review these lessons and insights that some of you, I mean, a lot of you love these things, and I know that's and they're worthwhile to review too, by the way. But here's something I want to show you with, and this is what is coming out now. So we're going to insert strategy on a blank chart. And you'll notice we've got Person Algo System 17 Extreme. And why is it extreme? Person Algo Optimizer is right now, if you take a look at what we've done, your settings, some of them are pretty much the same. Your max trade loss and your max profit, you'll be optimizing that, or that, you know, based on your signals. But if your max loss on a day trade is $500, then bang, you could, or $300, whatever it is, and your max profit, those will always be the same. And if you're not a day trader or a swing trader, you want to, again, change those functions based on your strategy report results. Next, everything else kind of, we optimized and changed our scale out ratio function, allowing you to go 0 to 1, which means trail the stop, get out of everything at the profit, or scale out. What's the best thing to do? And if you're trading stocks and you're trading thousands of shares, you can put this at 0.10%. So 10%, 20%, 30%, 40%, it'll optimize and figure out, should you get out of 30% of the trade, 50% of the trade, 90% of the trade, what's the best thing to do? If you're trading futures and you're only in 2 contracts, 0.5 for 50%. So if you're trading futures and you're using 2-lot contracts on your position table, in essence, just as a reminder, if you have your position calc method set at stocks at 100,000, or if you have that set at 2, which is get me in as many trades as possible, many is positioned, but I'm only risking $1,000 on this trade, or what I'm referencing is number 3, which has to do with your position size. 2 lots, 4 lots, 8 lots. If you're doing by multiple contracts in 2s that's divisible in half, that's where you would be using your scale out function of 0.5, and then you would optimize that out. But here's what's special about this product. I shared this once before a long time ago, and I don't think a lot of you guys thought it was it was possible that we could do it. A lot of people thought it was too much work and it was going to be tough to do, and they were right, it was. But look at this. We can now qualify to find out if a buy signal has a better risk reward than a sell signal. So maybe buy signals, markets go up and only give you a 1-to-1 risk reward, but when markets go down, they give you a 2-to-1 risk reward. Well, that's pretty cool, nifty information. Rather than optimize everything one size fits all, we were able to optimize, and we're able to find out, are there better risk rewards on buy signals versus sell signals? Now, here's the most insane function and why this is extreme. We have a function in here that says, by the way, do we get better results on a PPS buy signal when price closes greater than a moving average? What moving average? A 2-period, a 5-period? If this is a 60-minute, should I be using a 5-hour moving average? That's what a 5-bar is. Should I be using 10, 20? What do I want to do? What would give me a better buying opportunity? Well, when you run these scans, and we'll have video explanations better, but when you go to optimize the moving average, all right, so you go to moving average optimization function. If it's a 60-minute chart, you don't want to go 200, do you? No. So you want to do like a 3-bar versus maybe go up to, what, 20 periods, right? 3 because that's more than 2, and then less than 20 on an increment of 1. And now I can find out, now I'll be able to find out, do I get better results, better filtering of buy signals once not just they close over a last conditional change, but they close over a specific moving average. So if it is just so happens that you get a last conditional change and a moving average, wow, how cool would that be? And that's why this is extreme. And we're independently taking risk reward, moving average, and last conditional change on buy. So if you wanted to develop, by the way, check this out, a buy system only. I only want to take buy signals. You know, 90, 80, 70% of the time stocks go up. I don't want to take any sell signals on stocks. I'll take I'll take sell signals on another hedge protection product or something of that, whatever your decision is. But let's just say you only wanted a long only system. Now you got long only. This is why this is extreme, because you can qualify whether a buy signal needs to be confirmed with a moving average crossover or a last conditional change, and then you can confirm if a high close doji needs a lower or higher risk reward than the PPS buy signal. So now I can run a test on independent signals. Maybe we find out that the high close doji doesn't need a moving average. maybe we find out the high close doji doesn't need a last conditional change. So we can independently filter out and find out what the best profitable signal is and break it down between which buy, high close doji, PPS, and moving average, a last conditional change, and also do the same with sell signals. This may seem like, boy, that's a little extra couple steps, but boy, can you imagine the results and also the filtering of false signals, how that's going to be instrumental. I already have seen better results, and I'm here to tell you it is going to be the hottest thing on the planet. And I think a lot of you already have found success with it, so it's kind of like even a better function. So we've left the market order, or the entry order, all the same in there, but it's this function of testing to see if buy signals, as the old adage is, markets, they do what? Markets go up slowly and take the elevator down. But in this case, on a 60-minute, markets, they're taking elevators up and stairway down. You see that? But anyway, the adage is, if tops, there's rounding tops and there's V bottoms. And the point is, if markets form V bottoms, that means they happen faster. So do you want a high close doji for a buy signal? And if tops take longer to form than bottoms, do we need a PPS sell signal? Maybe we got one here and then the market went up, and maybe we got one there and the market went up. But if the market takes time to go down and then generates a PPS sell signal below a moving average, that might help us from prodding and probing and help decipher between powerful buy signals and longer duration setups on tops. And that's where Algo 17 Extreme is going to be launched and unleashed in your hands. So anyway, I hope everyone, that concludes our time together tonight. Thank you for attending. That was, I think, a really good example of a PUG group of what this is supposed to be, designed to say, how does this stuff work? How's it working in real time? How's it working in today's environment? And how can I apply this stuff to make money? And I think I hope I did a good job for you tonight, because that's what this is about. It's about you getting better and using a product that is, without a doubt, institutional grade information, better than most people in an institution have access to. So thank you very much, everybody. I look forward to seeing you at our next event. For those students that are coming to the summer school session, boy, do I have probably one of the better presentations ever, and I've already heard incredible reviews for you guys. Thank you so much. And I know that some can't be there this Saturday because of different events. It is recorded, and you'll have access to it. Thank you all very much. Until the next time we meet, have a great trading time.